Lord, you deserve praise. You deserve worship. You deserve all glory, all honor. It's yours. Even as we are here today, we are your sons and your daughters, and we come to partake in you. We ask that you teach us. We ask that your precious Holy Spirit impart in us light, knowledge, understanding, illumination to help us in our lives. In Jesus' name, amen. Hello, guys. How's it going? How's everyone doing?
Cool by His grace, and we are kicking life in color.
Oh, sweet, 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 sweet.
Yeah.
Good,
Yes.
good, good.
Oh wow! I hope you're also doing good.
By God's grace, I'm well and kicking cry. We are
We thank God.
warming up for our fifth anniversary. Yeah, true.
Yes. So
Congratulations once again.
Thank you, thank
yeah,
you, thank you,
congratulations
thank
in
you,
advance.
thank you, thank you, thank you.
Yeah.
Very, very exciting, very
It's
exciting.
not an easy journey
Oh,
though.
it's not, but the Lord is our strength, so
Yeah. Yeah.
it has been good. It has been good. So far, so good. And we are
Yeah.
entering the season of grace, and we expect to see a higher glory car even as we go forward.
It
Amen.
will happen. It will
Sharp,
happen.
sharp, sharp, sharp.
Yeah.
All
That's
right.
right.
So yes, I think everything we are doing.
Um.
Mhm.
Yeah. Ernest,
Yes.
you know that this is your strategy. I'm trying to get it, and yes, so it's some way to,
It's
because
some
I've
way to
still not
you.
been able to adapt to it.
Okay, okay,
Yeah.
okay. So then today you should pour out your questions so that I can help you get it clearly. Clearly. Is that okay?
Mm,
So
all
now,
right.
uh, I think before the close of the day, I posted a few traits in our chat. Let me see. Let me see those traits.
Yesterday I saw it. Some 4 hours chat this thing.
Yes, 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 exactly.
I was then confused. Like the thing was 50 minutes, now 4 hours.
Good, good. So you realize that those charts were not Euro USD and Pounds USD.
Yeah, yeah,
Good.
yeah.
So that is the distinction. When I'm trading Pounds USD and Euro USD, I am strictly 15 minutes. Because the goal of trading Pounds USD and Euro USD is to trade a setup every single day. But when it comes to the other pairs, I'm not looking at trading them every single day. So with that, I go on the higher time frame, the 4 hour,
Oh, okay.
looking for the same thing. Are you getting it? So with the other pairs, I'm
Yeah.
looking at swing trades. I'm looking at trades that can be running for 2 days, 3 days, or the rest of the week. But when it comes to pounds and euro, it's a daily
Oh,
setup
okay.
thing I'm looking for. So that is what caused the switch from moving from a 15 minutes to a 4 hour. So when I do that, I go through all the currency pairs I can look at just to see which of them aligns with my
Ah,
setup. Is that okay? And then if
okay,
I
okay,
find it, then I'll
okay.
like,
Right.
okay, I call it out. So that was the main essence of those two setups. And they actually played out pretty well. Is that okay? So now,
Yeah, I realized so, because the
good.
way they were moving now. So,
Yeah. So now let's look at Euro USD. Yesterday, what happened? Yesterday, we had the liquidity to the upside taken out first. So we knew that our bias for the day was to sell. Like nothing will change our mind. It's either two things. We are either buyers or sellers for the day. Let me show my face. Good. So we are either buyers or sellers for the day. And then our decision to be a buyer or seller is always based on what the market tells us or the card the market shows us. And so we have to wait. All you have to do is wait to see when the day begins. And most of our day starts at 6 a.m. GMT, right? So it begins and we're on our chart and we are asking, will the market, whatever happened during the Asian session, which is the Sydney time frame, using the Lux Algo Sessions indicator, it just pointed out to us. Is that okay? So what happened during the Asian session? We mark the high of it and we mark the low of it. So this yellow line signifies the start of our day. Okay. So now when our day begins, after the yellow line, we are watching for one or two things. Either the high side gets broken or the low side gets. Also, I'm teaching. Go to mommy. It's okay. Go to mommy. Don't cry. But she can't come while she's crying. So we see that what? The high side or the low side, we are looking after the yellow line, which mostly around 6 a.m. We are checking to see. So every 15 minutes, we are just observing, will this market break to the down or to the up? If it breaks to the upside, now we have a bias. And why do we have a bias? Our bias is from the fact that we know that there's money sitting at the Asian high and money sitting at the Asian low. So if the market decides to take the money sitting at the Asian high, then we'll join the market to come for the money sitting at the Asian low. So yesterday, we had the market taking the Asian high. And then what we do next is we wait for a fair value gap. So we get a fair value gap over here. But when the fair value gap happened after this 3 candles, it always takes 3 candles to see a fair value gap. So we had 3 consecutive bearish candle. Sell, 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 and then a fair value gap. So now that this fair value gap is created, all we are doing is what? We are waiting for the market to pull back and come and activate what? This fair value gap for us. We are waiting for this market to come and activate this fair value gap. Is that okay? The moment we see it. So we see this fair value gap at this time. That is 7:45. When these 3 consecutive candles close, they left this fair value gap. So at 7:45, we see it. And then at 7:45, we come and put the limit order there, in hopes that this market perhaps will reverse, activate us, and then drop. Then we go for a 1:3. But what happened was what? The market kept going down, 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 and took out the liquidity. This is the liquidity we are aiming for. This is the money we are aiming for. But the market decided to go for the money without us. So when that happened, it's like our bias got nullified for the day. Are you getting it? So we are not looking for the setup again. But lo and behold, the market came back to that fair value gap that we have stipulated and expected that will come to. It came back, activated, and went down. But at this time, we're not looking for the trade because what? Our liquidity had already been grabbed. So that wasn't a concern for us. So it's like, hey, we are not taking a trade for the day. But that was the setup playing out as we expect it to. Is that okay? So Eric, I want you to ask the question. What's the part that you don't understand? Like, why are you struggling with the strategy?
The liquidity high and then the liquidity low. So concerned with the Asian high and then Asian low.
Okay.
Right.
Yes.
Yeah. So I was trying to figure it out because the last time I tried and then it went against me.
Okay.
So thinking that okay, because it's the fair value gap, the price has to go and then take either of the lows, either
Yes.
being a high or low.
Yeah.
Right. So after that, then you're waiting for the reversal from there.
Good.
Right. So
Good.
being bullish or bearish.
Yes.
Before, and then when the fair value gap appears, then you had opportunity to go in. Right. So later on, when I tried, I don't know, it seems I picked the fair value gap. That is before the London session? There was one bit that shows up. So I was contemplating that if it is 50 minutes and it was on either before, it should be able to, because if it's going to the how do you call it? Maybe high, price is going high. Go and take the higher side before reversing. I should be able to join, and then for us to go there before reversing, and then maybe quit the second fair value gap.
Okay, so you are trying to take both liquidity, both the up and the down.
Yes.
Okay, so that is where the problem is. You don't want to take both the up and the down because you are not certain when it's beginning, when the market starts going in one direction, you are not certain it will go there. So let's say that on this day we saw this yellow candle. Are you getting it at 6:30? Do you see the yellow candle? And so we perceived that the market was going to go up, right? And then we decided, okay, we are going to join. No, we don't have to do that because sometimes it will just get to this side and then reverse and decide to take out the low first. So always you want to wait for one part to be taken out. And then we'll join the market to take the other side. Is that okay? And then there's also this thing. Let's say the continuation. Let's say you see that, the market breaks the high and want to join to the upside. One thing that will normally happen is it will move to the upside for about 10, 15 pips and it will start reversing. Because the goal of moving to the upside is to stop people out. It's a stop hunt move. Are you getting it? So people will normally enter a trade and put a stop loss within 5 pips, 10 pips, 15 pips, 20 pips. So that is all the market is interested in. As long as it takes out those people, it doesn't have any business going up again. So it will normally reverse. That is why we don't normally join the continuation. Are you getting it? That is why we are always trying to trade the reversal.
Yeah.
Good. So ICT calls it the Judas swing. It will act like it's going up, and you are seeing that, Charlie, the thing is going up. All of a sudden, the thing will just reverse and swing in the other direction. I hope you get it.
Yeah.
So always we just want to wait and see. Will the market take out the high liquidity or the low liquidity? And once it takes out one, we know we know our bias or we know our stance for the day. Is that okay? So just as today is a new day, we come on our chart and we are not doing anything different. We mark out our Asian high. And then we say, hey, there's money sitting at this high. And mark out our Asian low. Mark out our Asian low. And say, hey, there's money sitting here. So now our day starts here. And now we are seeing, will the candle that opens go to the upside or to the downside? So today it took the upside. So when it happens, what is our bias for the day? We are sellers for the day. Are you getting it? Now, what we have to do, we have to wait for a fair value gap. We don't wait for just to see a bearish candle, then we enter. No. Don't do that. It is not confirmation. So here, the moment this high got taken out and you were waiting, when you saw this bearish candle, you decided to sell, you realized that you would have been a scapegoat to the market. Let's say you saw this bearish candle again, you decided to sell, you'd have been a scapegoat to the market. Every bearish candle would have made you a scapegoat. Why? Because we've not seen a fair value gap. We've not had 3 consecutive moves and seen a fair value gap. Even when we had this 3 consecutive move to the downside, it was distributed effectively. Price was distributed effectively. There was no what? Fair value gap. So even though our bias was a sell, we couldn't enter a sell here because there was no fair value gap. Price distributed itself effectively to the downside. But still, we know that our bias is a sell. So even as market is going up, we don't come and see this buy fair value gap and say we are joining to the upside. No, our bias for today is not a buy. Our bias for today is a sell. So we'll wait for the market to exhaust the move, keep going up and doing what it wants, and then create a fair value gap, which is a red fair value gap, then we'll sell. So today, we as a community, with our FVG strategy, we wouldn't be buying Euro USD. We will only be selling Euro USD when a red fair value gap shows up. As long as a red fair value gap hasn't showed up, we don't have any business engaging Euro USD. I hope you get it. So always we wait for the market to show us its hand. Which side of liquidity did it take? If it took the liquidity to the upside, then best believe that there's also money sitting here. And Mr. Market will also want to enjoy the the money sitting here. So guys, I want you to start processing and understanding the thing in this essence, right? There's someone who has caught this buy all right too, and has put a stop loss below this. And this person wants to ride it to the moon. He's trying to get 100 or 200 pips on Euro USD. But realistically, Euro USD will not give you 100 or 200 pips. On a normal, it will move like 50 pips in your direction. And that is when you are supposed to close and secure your profit. But majority of traders will not, expecting it to go for that 100, 200 pips. Then the market will see that, hey, Charlie, more traders are piling up, more money piling up and sitting here. So we will just reverse, and come and take those traders out. So that is what Mr. Market is always doing. It's looking for where the money is. So everyone who is buying and putting their stop loss here, Mr. Market is seeing it. He's seeing all the order books, all the limit orders, saying, oh, there's a lot of money here. There's liquidity here. It is going to act as a magnet for price, and it will pull price towards it. So that is the concept. That is the idea we are trading with. Are you getting it? And then we are simply going for a 1:3. And I've said that what? We have three kinds of trader. One trader will decide to always use a 10 pip stop loss and a 30 pip take profit. Another trader will use 15 pip stop loss and 45 pip take profit. But all traders are still going for what? A 1:3 to reward. 1:3 to reward is that sweet spot that you know that when you have 3 consecutive losses and 1 win, it resets your account. Are you getting it? So that is what we normally aim for. And that is what we just look out for. So today, all we are doing is we are waiting and waiting and waiting till we see that sweet fair value gap for a sell, and then we decide to go in for a sell. Are we good? Any question? Any question? Any question? The floor is open. If you have any question, let's hear you out.
Okay, good morning.
Yeah, good morning.
Hello.
Yes. Go ahead.
Yes, sir. Good morning. Please, I wanted to. You were talking about the bearish candle and then the confirmation. Yeah. Mostly, when there is a bearish candle or there's a bullish candle, most mentors will tell you that the moment you see it, you should just jump into the market.
Yeah.
But by now you just say something like, with what we are trading with, there's a fair value gap.
Yes.
So that means when we see a bullish or a bearish candle, and we don't see our fair value gap as a confirmation to that particular market or to that candle, we should wait till we get the confirmation before we enter the market.
Correct. So the fair value gap, right? The fair value gap gives you your entry. It's like you take out without a fair value gap, you don't know where to enter. Are you getting it? And the common analogy I like to use is when you wake up from your house and you decide I'm going to Pet 7, I'm going to Circle, or I'm going to Accra, right? You have to move from your house and go to a bus stop to be able to what? Pick those Trotsky or those buses to the intended location. So the fair value gap is like a bus stop for us to know that this is where we are supposed to enter the market or enter our trade at. Am I clear?
All right, I get you.
Yes, good. So pretty much you use what? Fair value gap to also protect you, to prevent you from having very huge stop loss. It gives you that sweet spot. It's like, hey, let me put my entry here. My stop loss can be 10 pips away or 15 pips away or 12.5 pip away. And the more you trade pounds USD and euro USD, you realize that using anywhere from 10 to 15 pips is a good stop loss to trade with. Okay, let me check the chat. It looks like there are some questions. Please, what indicator do you use to identify the Asian time and London? In fair value gap, should we wait for the candle to close before entry? So anytime we have a fair value gap, we always use a limit order. When you have a fair value gap, you use a limit order to enter your trade. Is that okay? So it means the candle will have to close, and then you come and put a limit order, and you expect that the market will return and come back again to come and activate your limit order. That is what we are looking for. And then the indicator that shows the Asian and London session is this. You come to indicators, and then you search for sessions. Sessions by Lux Algo. When you add sessions by Lux Algo to your chart, it automatically shows you the various sessions, right? It shows you New York session. It shows you Tokyo session. It shows you London, and it shows you Sydney. So it show you all these 4 sessions. Okay. But here is the case. We are not interested in all 4 sessions. We are interested in the Sydney session. So we'll come and then we turn the New York off. We don't want our chart to be. And we turn the Tokyo off. The Asian session, we choose the Sydney. If you use the Tokyo will take you into the London. So we'll keep just our Asian Sydney session and our London on. Is that okay? Then we know that, okay, with our Sydney, and then we know that is where our day starts. Because when the Sydney is in play, we are sleeping. That is our sleeping time. So we come on the chart when we wake up. And then we come and look for our setups. Is that okay? Any other question?
Please, yes, please, I have another question. Someone just asked if you see the fair value gap, should you jump into the market? Then you were saying that we should wait for a pullback before.
Yes.
There are instances, I've seen 1 or 2 instances whereby I think it was Euro USD, whereby there was a fair value gap, first one, and there was a second one.
Yeah.
Actually, the second one didn't pull into the mid or the 50% of the first fair value gap. And I was waiting for it to come to that area so that I will buy, but it never came. So in this case, should I still join the buy, or I should still wait for it to make a pullback and then join?
Okay. So what I do is I put a limit order, and I don't emotionally and manually control it. I don't emotionally watch for it to come and activate, or emotionally watch and say, Charlie, it's not activating, so let me manually put it in. Are you getting it? So when it happens like this, like so, yesterday we had even 2 fair value gap. This was a fair value gap. This was also a fair value gap. But I put my limit on the first one and I just ignored it. Is that okay? Anytime you are manually trying to watch it, you will be tempted so many times to put in the trade when it's not forthcoming, when it's not trying to enter where you want it to enter. So you must accept that, hey, I'm going to use either the first or the second fair value gap, and I'm going to put a limit order for it to be activated, and allow it to activate. Don't try to say, Charlie, choose it. Say I'm going to use the first, I'm going to use the second, and then accept that the market can activate or it cannot activate. Let the market do what it wants to do. But all you know is you've correctly stuck to your rules, waited for a fair value gap, put your limit order at a fair value gap. Now the job of the market is to do what it wants to do. Is that okay?
Yeah, okay, thank you.
You're welcome. I don't know why you can't hear, but it's like my mic is on, everything. I'm speaking loud and clear. I'm okay now. Okay, good. All right. So pretty much that is it. That is it. Let's look at pounds USD. Pounds USD is having a field day to the upside. Is there any red news that's causing the very bullish movement in the market? So let's check my FX book to see if there's any red news.
Today there are a couple of news that is coming in from
Okay.
12:15 to 2 p.m. GMT. There are a couple of news. So
okay. There are a lot of red news today.
the market is going to be volatile.
Very, very volatile. I see there are a lot of red news today.
So we can see a seesaw market grow. Like,
Yeah. That one there will happen. When there's volatility like that, it will whipsaw to the upside and whipsaw to the downside. That one, it will happen. Is that okay? So sometimes when the something like FOMC or NFP or CPI, these news are very heavy, and it goes both to the up and to the downside. So sometimes when you see it, you just want to stay out of the market quietly and just say that, hey, today there is a holiday. Let the market do what it wants to do. and I'll come in tomorrow. So today you can see that on pounds USD, our bias is what? A sell. So even with this move, all we are doing is we are sitting on the sidelines until we see a sell fair value gap, and then we'll sell to the downside. And it will be sweet if this market is able to. You can see that there's a lot of liquidity sitting here, a lot of lows that are here. And the market might want to drop if there's one news that favors the US dollar, it will drop sharply just to come and sweep all this liquidity sitting here the previous day and even the Asian session. So today all we are doing is we are waiting. When that fair value gap is good, we know that actually we are good to go. Is that okay? So that is one thing to note. Always try and filter out your bias. If you don't filter out your bias, you end up buying and selling, and it's like it will mess up your brain, it will mess up your psychology. You just feel some way. But when you're able to filter out your bias, you know that hey, I am just looking for a sell today. And so all the trades I'm supposed to take today should be sell bias. Is that okay? So yes, that is pretty much it. And now I want to touch on pounds USD, pounds JPY. We don't normally do it, right? But this morning, it's like just following the rules of our setup. Okay, so when this setup just showed up, no, I just put it in the chat. Guys, check pounds USD, pounds JPY M15. And what did it do? It created the Asian range as usual, the high and the low. And when the day started, it took out what? The Asian low. So we know that what the bias is that it should go and take out the Asian high. And what did it do? It started consecutive bullish candle, and then it created a fair value gap here. Let me turn on the fair value gap indicator just to show the fair value gap. So you see that what? It created this fair value gap here. And then, even though it went high, we expected that, hey, it's going to come back. So our limit order was just sitting here, waiting for it. Then after like 30 minutes, it came back to tap into it. And then straight. Are you getting it? As we just had a move to the upside just to take out this liquidity. You see, the main agenda of going up is to what? Come and take out this liquidity. Nothing more, nothing less. It's like there's money sitting here, and that money is for Mr. Market. Mr. Market will go for it. I hope you are getting the bias. Okay, so now you are done here. But when you go on the 4-hour too, you realize that, let's go to the 4 hours on this. So on the 4-hour, you realize that there's a fair value gap sitting here. There's a fair value gap here between this candle and this candle. There's a sell fair value gap on the 4-hour. So our expectation is that, okay, a sell trade can be activated here, and it's permitted to play around this area. But now our setup becomes invalid if it goes beyond this area. Is that okay? So even though on the 15 minutes, our bias was what? A buy every time frame. You see, that is one thing I tell people, like when you pick a time frame, just stick to the time frame. Otherwise, you get confused. Now you are seeing a buy on the 15 minutes and a sell on the 4-hour. And it's like, now what do I do? What do I take? But if you are diligent on the 15 minutes, your 15 minutes will play out good for you. And if you are diligent on the 4-hour too, you'll be watching for this sell setup to also play out, which will look like this. Your entry at this fair value gap, your stop loss above, this is the swing high, so a little above the swing high, and then you aim for, let's say you're going for a 1:3, right? and that someone who is trading the 4-hour, this would be the bias of the person trading the 4-hour. And the person is not wrong. Just as the 15 minutes trader was not wrong, the 4-hour trader is not wrong. You have followed your rules and allowing it to play out. So always, I'm saying, find your poison. If your poison is 5 minutes, stick to 5 minutes. If your sweet spot is 15 minutes, stick to 15 minutes. If it's 30 minutes, 1 hour, 4-hour you use, you want to find it. So find something that suits you, like something that flows with your vibe. Are you getting it? So the fact that the 15 minutes trader bought and has been successful doesn't mean that the 4-hour trader is wrong on his bias. I hope you are getting it. So there's also something I wanted to bring to your mind. You can't just oppose a 15 minutes trade on the 4-hour and say that, hey, like 4 hours, do what the 15 minutes is doing. No, everyone sees a different setup on each time frame, and each setup is valid as to the time frame you are doing your bias and your analysis on. And easily on the 15 minutes, I think it has done about 80 to 100 pips. Is that okay? So it moved from, the entry was what, 887, and then it moved high to what, 800. So that's about 90 pips up, moving up. Are we good? Do we have any question? Do you have any question? So actually, on pounds JPY, I'm expecting the drop to come. This fair value gap, this fair value gap is even what I am targeting. This fair value gap, that it can come and fill this and even come and take some liquidities sitting here. And when it comes to pounds JPY, the Ansoni, moving 300 pips, it just does that with ease. Just last night to this morning, it just dropped 100 pips like that. So you give it time and it's like, oh, this move can be an easy playable move for what, pounds JPY. So long term, this is what I'm looking at. That pounds JPY should be able to sell to drop to this area. Yes. So and also just looking at, you see this drop, the bearish candles. As this drop occurred, it took out some lows here. It broke some structures over here. Now, when this move happens, we see it as a pullback move or a break and a retest move. It broke some lows here. We expect it to go and retest back from where it started, and then we can have another move. And so when we see that this yellow candle, as time plays, and then the move reverses to come and break this low, this current low, then you can know that, hey, we will be aiming for the lows below till we come here. When you look at pounds JPY, you can see there are a lot of imbalances on the chart, a lot of buys. The market didn't pull back to balance itself when it started moving from 172.666. So from this day, that is June 7th, it's been very bullish, and it hasn't even had time to reverse and come and balance these sheets, right? Even the move to the upside started from here. That is May 11, 167. Then it started becoming very bullish, and it hasn't had time for bears to also take over. Are you getting it? So when bears also take over, when the move switches easily, and one thing about bears is when they take over, they don't wait. They are too aggressive when they are dropping. If bulls took like 3 weeks to go up like this, bear will just take 1 week just to clear out the gains that was made in this corrective move. Go up, down, down. Bears will just come, and it's like they don't just want anyone to catch the move. They just want to abuse the market by dropping aggressively. So yes, that is it. I think there was a question coming in. Is it Richard? You had a question.
Sorry, I wanted to ask. I really like watching pound JPY.
Okay.
I wanted to ask if the strategy is good. Can we add pound JPY to it?
So you can do the test behind the scene and see, okay, I'm adding pounds JPY, and you are checking if it works well. Then you come and tell us that, hey, guys, we can add pounds JPY to it. It works. Are you getting it? I don't want to be on the spiral where it's like I keep adding. I've just focus and hone in on pounds USD and euro USD. But the strategy can also be replicated on other pairs as well. So you can decide to say, hey, I'm going to be that pounds JPY guy. When you need any pounds JPY guy, pounds JPY setup, confirm with me, because I've been watching the chart back to back and back to back. So yes, you can decide to add it. But one thing about pounds JPY is it's also a volatile pair. You don't try and do that with a 15 pip stop loss. No, you will be stopped out easily. Aim for like 30 to 50 pips stop loss. Are you getting it? When you decide to use pounds JPY, because it is a volatile pair. Are we good? We have about 2 minutes to go.
Thank you.
Yeah, so in-person session this Saturday is a gem. You see, I've spotted something that is the cheat code. The way we're milking Blue FX is something very similar, and I just want to share it with the inner circle. So Saturday 2 p.m. It goes with a fee of 250 cedis. Okay, so if you want to participate, do all to register and come in person. So without much, I have to say peace out and catch you tomorrow. Have a good rest of your day.